Welcome to The Nation. I'm Rachel Smalley. Taxpayers were told the government's asset sales program would likely raise between $5 and $7 billion. But the partial floats are turning into fizzers, with the latest, Meridian Energy, attracting fewer so-called mum and dad investors and a lower price than hoped. Now, with shares in Genesis and Air New Zealand next on the block, is it time to rethink the partial privatisation plans? Finance Minister Bill English joins us now live from Wellington. Good morning, Minister. Thank you for joining us this morning.
Good morning, Rachel.
So, if I could start with something that Brian Gaynor said this week. He said the Meridian float has been an epic failure. They were the words he used. He said because only half of those who signed up for Mighty River Power have signed up for Meridian. Are you disappointed by those numbers?
No, and I disagree with both the description of it as a fizzer or a failure. Just keep in mind what we're doing here. This is going to provide from now on, opportunities for New Zealanders to invest in a large Kiwi company. What's developing around our stock market is a trend towards New Zealanders buying back assets through our stock market, and we've seen it again just in this last week with a few more offers. And there's anecdotal evidence that in the case of Mighty River Power, at the lower price, it's New Zealand retail investors who are buying in and offshore investors who are selling down. Now, that's just anecdotal evidence, and we'll see how the trend goes. In the case of Meridian, there is the one-off offer at the start, and that's been taken up by over 60,000 shareholders. But it is going to be listed on the market next week, and it'll be an opportunity available, along with Mighty River and in the future Genesis, several $1 billion worth of companies that weren't on our stock market before that are attractive long-term investments.
That said, it was disappointing, of course, with the situation with Mighty River Power and the buyback there. Do you concede that the price was just simply set too high from the outset?
Well, if your objective was to give investors a windfall gain at the start, then I suppose you could argue it was set too high. But we've been trying to find a balance here between, and it's an unusual balance, not normal in the stock market, trying to find a balance between getting maximum value for the taxpayer with assets that are, subject to market scrutiny where they weren't before, on the one hand, and on the other hand, ensuring that they're relatively attractive to a broad range of investors. Now, that's not what usually happens. Usually, people going into the market are trying to get the most money they absolutely can, and they're focusing on a very narrow range of investors. Between these two floats, we've got 170,000 new retail investors. Some people say MRP was priced too high. If there's an uplift in the Meridian share price in the next couple of weeks, they'll say that Meridian was too low. On balance, it's a pretty good effort, and New Zealanders now have much bigger opportunity than they've ever had to invest in strong New Zealand companies.
When are you likely to float Genesis, do you think?
Well, we've indicated it'll be in the first part of next year, and that'll be subject to the same criteria as these other floats, and that is suitable market conditions where we believe we can achieve our objectives of widespread New Zealand ownership, 85% New Zealand ownership and reasonable value.
You've announced some PPPs, some public-private partnerships. I think the latest one is to rebuild a wing of a prison. Is that a model that you're moving more towards, the PPP model, than as opposed to, straight privatisation?
Well, we are using it because it has a lot of benefits for the public sector. So if you take the example of the prisons, most of our prisons, of course, are run by the public sector, but the prison service has learnt an awful lot from negotiating with the private sector about how to manage the risks of new prisons and how to manage the costs of running them. They're taking the best ideas from that, applying it to the rest of the sector. Same with schools. We've only done a handful of schools, but it's helped us understand a bit better ways of running the other 3,500 schools. So we'll keep doing it, but they're never going to be a tool that's used for a majority of government investment.
OK, I want to look a little bit at the economy now, Minister. What impact do you think the US shutdown had or has had on New Zealand?
Look, I don't think it's had much impact in the short term, but it's just one of those risks that's going to create uncertainty over the next 3 to 5 years. Because if you stand back from the shutdown, the US has to work out how to stop printing money and then how to shrink all the balance sheet that results from all the money it's printed. China is trying to deal with its credit problems because it's had a credit bubble a bit like we had in 2006-07. Japan is pumping up its printing press, so they are really printing money on a large scale. And that's the third biggest economy in the world. One day they'll have to stop, and then they'll have to shrink that as well. So over the next 3 to 5 years, you've got some quite unusual circumstances where the three largest economies in the world, and then Europe's got its own problems as the fourth largest, all having to go through unprecedented adjustment. So I would expect outbursts of anxiety like we saw with the US shutdown. It could be European banking problems. It could be Chinese demand for commodities drops off. And we have to be pretty resilient to deal with those uncertainties.
Also, as you said, you were in Washington during the shutdown. Were there conversations going on about sort of a move away from America, a de-Americanisation, if you like, of Asia, and also perhaps starting to question the US dollar as a reserve currency?
Yeah, I don't know if people seriously believe that the US dollar would not be the reserve currency, but what they do want to see is a political process that looks like it's capable of running the world's largest economy in a rational and vaguely predictable way. And I think when people start saying things like questioning the US dollar as a reserve currency, it's a way of sending a message to the US political establishment that it matters to the rest of the world how they do their politics. It's not just about the US. And while everyone knows there's political tension around issues like debt and deficits, they want to see the US resolve them. And that is particularly relevant for us in the Asia Pacific, because the US is a key to getting the Trans-Pacific Partnership trade agreement signed up, which now involves Canada, Japan, most of Southeast Asia, New Zealand and Australia. And it would be it would not be a good thing for the US profile in the Asia Pacific if they can't complete that agreement, and we're keen to see that happen.
That said, it does seem, I think the term that many commentators are using is that America's just, kicked the can a little bit further down the road. Where are we at in terms of uncertainty? Is this still a pretty uncertain time?
Yes, it is. And we would hope, again, that they're getting a message from the wider world that it's in the US strategic interest, particularly if they're feeling a bit of pressure from the growing Chinese influence. It's in the US strategic influence to be able to manage their own affairs in a sensible way, and also to be able to make decisions that are positive for our region, like sign up with the Trans-Pacific Trade Agreement.
OK, the IMF forecasting growth, I think, in the final quarter of next year of 4.1%. Good news, I guess, on one hand, but is there a danger attached to this as well?
Well, look, it's certainly good news for more jobs and higher incomes. But as always the case with growth, the good growth, you want it to be sustainable. So that's why we've got to keep continuing with a policy that allows businesses, encourages them to make good long-term investment decisions, that will encourage them to employ more people on a sustainable basis.
I guess it could also fuel inflation, though, house prices as well, that level of growth. It's fast growth, isn't it?
It is reasonably fast growth, and that's why I think you're quite right that one of the risks ahead of us is fast rising house prices. That's why Nick Smith a couple of weeks ago announced special housing areas for 5,000 new dwellings in Auckland. There's more of that to come, because we need to respond to the strong demand for housing that kind of economy will deliver by getting more houses on the ground sooner and the machines up and running.
At the Infants Conference recently, you said there's a fast rising housing market and household debt is picking up from record levels to above record levels. That sounded like a little bit of a warning, I guess, Minister, was it?
Well, I think it's a matter of stating the facts. And if there's one way to look at economic change is that, the changes we've seen recently are permanent. The other is that in the long run, economies revert to the norm. And if you look at what's normal over 30 or 40 years for house prices in New Zealand, and particularly the ratio between house prices and incomes, then we're way out of line. If you look at our debt levels over 30 or 40 years, then they're way out of line. Now, there's a legitimate argument as to whether they're always now going to be higher or whether they're going to come back to the norm. And I just think we need to be pretty cautious, and so our policy reflects the need to take pressure off house prices off interest rates, pressure off the exchange rate, so we can have all of those lower for longer. That would be good for the economy.
That 4.1% growth forecast largely thought to be the result really of the Christchurch rebuild. So where potentially asset sales have fallen short, is the Christchurch rebuild in a way plugging that hole for the economy?
Well, it's certainly helping. There's no doubt about it. Bear in mind the taxpayers putting about $15 billion into that rebuild, so we've already paid the bill, and it'll be nice now to see the money flow through and the jobs and the better incomes. But you're right, the Christchurch rebuild will run through over the next 4 or 5 years. And I would hope that by then we've got a robust export economy that is creating jobs, attracting investment, so the economy can continue growing after we've rebuilt Christchurch.
The Reserve Bank forecasting interest rates to go up by 2%, I think, by the end of 2015. Will the LVRs, do you think, in your opinion, will they avert that, or is that still likely to happen, do you think?
Well, you need to talk to the bank about, the relationship between their LVRs and the interest rate forecast. But what they've published has said that they think the LVRs could knock 1/3 to 1/2 percentage point off the interest rate forecast. But the effect of the LVR restrictions won't last forever. And as the Reserve Bank has indicated, it has a small difference at the margin, but it doesn't make a big difference in the long run. And that's why we're focused on the supply side with housing, because more houses on the ground sooner could have a fairly direct impact over the next 2 or 3 years on the interest rate cycle, where we want to see it lower for longer, and that's why we're getting on with it now.
Treasury documents also this week revealed that another way to cool the market, avert the bubble, if you like, would be with a capital gains tax. And that's no secret. We know Treasury has always sort of leaned on the side of implementing a capital gains tax. Also, though, what was interesting, it said there should be some restrictions on foreign ownership. Is that something you will ever look into, ever consider?
Well, it's been offered as advice from a few people, and we've had a look at it and decided not to go ahead with it. Treasury's version. Just because New Zealand, in general, is a country that needs to attract foreign investment, and it would be a pretty bad signal at a general level. But there's not strong evidence that it's a big problem in the housing market. In fact, the larger issue in the housing market now is New Zealanders not leaving for Australia. The outflow is reversed pretty significantly, so that's increasing demand for housing. So that's more of the issue. Bear in mind, Australia has a partial capital gains tax and restrictions on foreign buyers, and they're heading into exactly the same arguments as us in their eastern seaboard cities about house prices going too high. All of those things may have some small influence at the margin, but the biggest single issue in New Zealand, Australia, around the world is to relax the restrictions on supply of houses, allow our cities to grow, and that will deliver to people affordable, lower cost housing.
Who is the government protecting, in essence, by opposing a capital gains tax? Because that would bring us into line with, much of the rest of the world.
Well, look, my own view about it is that if you have a capital gains tax, then if you're going to have one at all, it should be comprehensive on everything. And that is impossible in New Zealand. It's a matter of faith here that the family home is exempt. And if you have a partial capital gains tax, then you get what you've got in Australia, a major industry in avoidance and not much revenue. And that's the predictions for here as well. So in the last 20 years, two or three tax reform groups have had a hard look at this in the late 80s, the early 2000s, again just a couple of years ago when we did our tax reforms, and each time they've come to the same conclusion, that actually it wouldn't have that much impact and wouldn't collect that much revenue.
It seems to work in the UK though, when it's, the family home is exempt, it seems to work there.
Well, it depends what you mean by working. If we think a partial capital gains tax will somehow keep house prices permanently lower, then they don't. Because in the UK and Australia, where they both have them as you've described, they have, in fact, in the UK, worse issues around house prices than we do. And in Australia, they're heading into just all the same issues. So it doesn't make that much difference. The big issue is supply, flexibility, more houses on the ground when there's strong demand for housing.
A capital gains tax, though, Minister, wouldn't penalise first-time buyers in the same way, though, that LVRs do.
Well, it's pretty hard to say, isn't it? Because we're not getting the opportunity to compare those things. The capital gains tax, I think, would be imagined as a permanent long-term tax. The LVRs are almost certainly a transitional measure. But again, around the world, all of those things are in place in different countries. None of them appear to have had the effect of preventing sharp rises in house prices where supply is restricted. And that's why we just keep coming back to the supply issues. That's what's at the core of New Zealand having among the higher cost housing in the developed world. We don't need to have that. We can have lower cost housing if we get the supply regulation right.
All right, Finance Minister Bill English, thank you for your time this morning.
Thank you.